Şimdi biraz datadan bahsedeceğiz. Küresel turizm verilerine stratejik bir bakış atacağız. Emanuel geliyor. CTR direktörü Emanuel'i alkışlarla sahneye davet etmek istiyorum. Lütfen yerlerimizi alabilirsek bu arada. Sayın Emanuel. Hello, welcome. How are you? Thank you very much for being with us. Buyurunuz.
Thank you. Günaydın, good morning, ladies and gentlemen. It's a pleasure to be back here in Istanbul. Thank you very much to the TTYD for the invitation. My name's Emanuel, I'm a director from STR based in London. And for the next half hour or so, I'm going to give you a presentation. We're going to be looking at data. And I've titled the presentation, The Rainbow After the Storm, because there's lots and lots of positivity which I think will carry on the theme from what we've heard from the other speakers so far this morning. So this is our agenda, and I'm going to start off by having a quick look at benchmarking. This was something that the TTYD requested that I do. We do currently work at STR with just under 400 hotels across Turkey. That's around 62,000 keys. But we want to increase that number. More transparency, more opportunity for our hoteliers across the country. Then I'm going to go into the data. I'm going to look at demand, at room rates. We're going to look at Turkey in more detail, and then finish with a glimpse into the future as well. But let me just start by talking briefly about benchmarking. And really, as I mentioned, TTYD asked me to talk about this. This is for the operators in the room, the owners in the room, the asset managers in the room. STR are the market leaders in hotel performance data. So we work across the world providing benchmarking solutions to the hotel industry. And as it says on the screen, it's impossible to take advantage of an opportunity if you don't know that it exists. And really, that's what we can provide you analysis on, and I'm going to touch upon that now. So the industry very much trusts STR. We are the market leaders in what we do. We've got unrivaled data quality, global coverage, and industry relations as well. So it adds up to, as it says, the most powerful hotel database available. And it's vital. It's vital for revenue management, for performance management, financial management, stakeholder management. And I'm not going to touch on all of the data points that STR collect around the world, but there are many. But I'm going to talk about some of those that I think are most vital for you here in Turkey to gain more of. And we're going to start with top-line metrics. So really that's very simple. That's occupancy, average rate. Put them together, you get RevPAR, which was mentioned by the Accor speaker earlier today. And this data can help you understand if you're ahead of your competition. Are you making gains in occupancy? You're making gains in average rate? Which days of the week, which months, which seasons do you perform better in? And are you adapting to the changing market conditions? Now, this top-line metrics are collected by STR for more than 73,000 hotels around the world. So in my mind, 73,000 hotels can't be wrong. They see the value, they see the benefit, and we want to extend that to more of you in the room and across Turkey. So at its simplest level, its very simplest level, this gives you an example. You've got a property here that's growing by 5%. So on the face of it, it's outperforming its market class, its sub-market and its sub-market class. But it is behind its competitor set. Now that comp set is an aggregation of those hotels that they compete with every night for share of wallet. So actually, it might be ahead of the market, but it's losing market share versus its comp set. So an opportunity that you may not have identified if you don't have that data. Similarly, once you start analyzing it, you can see how can you track more midweek demand, for example. Could you take better advantage of weekend demand? And do you need to review your strategy in low demand periods? These are all questions that your team should be asking themselves every night. But it's also total revenue. So this is really important for resorts, which of course are vital across Turkey. Not just rooms, but F&B, as well as total revenue. So again, we can provide that information so you can look at how you benchmark your F&B performance, as well as your rooms, and then your total revenue. And also, and quite new to STR, And I'm excited that I'm going to be able to bring you some of this data for the first time for Istanbul later in this presentation. Business on the books, forward-looking data. Are your future bookings ahead or behind the market? How are you picking up pace? And in this example, we can see, for example, the sub-market is being outperforming the property. So how can the property adjust its weekend strategies to make sure it picks up more of that demand? Likewise, it's doing well on a Saturday night. How can you continue that? How can you exacerbate that trend? And then the pickup, which is important here in Istanbul because of the short-term booking windows. You can see it's quite consistent in this example, but how can you ensure that that remains the case? And if your pickup is higher on one night, again, how can you exacerbate that trend? Events, so important for the hotel industry. You need to make sure that you're getting your fair share of that event business. And if you're not, do you need to adjust your strategy? Do you need to have a minimum length of stay or decrease your rate to encourage more multi-night stays? All questions that can be answered through this kind of benchmarking data. So how do you get started? Well, it's very simple. Come and talk to STR. I'll be here all day. I'll be delighted to have a conversation with anybody if they want a benchmark, be able to see these opportunities, ask the questions of their hotels, of their properties, and look to ultimately make more money from their hotel, which is what you're all here to do, of course. So enough about that. Let's now move on and have a look at data. And we're going to start by looking at demand. So this showcases key European countries. And we've got rolling 3-month occupancy here, indexed to 2019. And you can see there's quite a variety of performance across Europe. But if we look at the last 3 months, well, firstly, I'm sure you'll all be pleased to see that league table, Turkey sitting nicely on top above the UK, Poland, and France. And then those countries at the bottom of the slide are ones which restricted for longer. So restrictions were in place for longer, so they're struggling to build their occupancy quite so quickly. But we are, generally speaking, on a bit of an upward curve. Now, one of the reasons we're starting to grow again is, of course, consumer confidence. And this is data taken from one of our travel sentiment surveys. And the question we pose every quarter is, how important is COVID on our decision whether to book or not? And you can see, quarter after quarter, it's getting less and less and less. COVID is becoming less of a concern for travellers as they want to get out there and travel. And as a result, we're seeing more travellers now moving back to hotels. There was less keenness on that, so to speak, during the pandemic, but more people booking hotels, which is, again, great for our industry. What's driven the recovery so far, in the most part, has been leisure demand. And this showcases rolling 7-day occupancy for 4 large markets across the world. And you can see where performance is stronger, so pre-Omicron in Europe and the little boom that we're enjoying now, last summer in the States, and again across Christmas, Thanksgiving in the US as well. It's predominantly been driven by leisure demand so far. So it's perhaps surprising when we go back to our consumer sentiment survey that actually, when we ask our travellers their overall net propensity to travel now, both domestically and internationally, it remains a little bit subdued. It remains in negative territory. So we ask ourselves the question, well, does this mean people's desires to travel have reduced as a result of COVID? And we don't think so. People are always going to want to meet face-to-face. They're always going to want to experience. They're always going to want to relax, even if it means enjoying a typical British summer, which I have done so for the last 2 years as a result of COVID. And actually, when we look forward and we ask people about their intentions to travel post the pandemic, you can see net propensity is up for both domestic and international travel. So we are moving in the right direction. And we see that as well. And the reasons for this, people want to get out. Of course they do. They want to travel. They've been pent up for 2 years. But another reason is a lot of people saved a lot of money, right, during lockdown. Saving rates have never been higher in recent times. So although there is a cost of living crisis in many countries, we're quite confident that people's wants and desires for a holiday are going to be very near the top of their wish list. So we should see some strong demand. And that's starting to translate through to the data. Now, this is Devon and Cornwall, which is the southwestern tip of England. So it may not be relevant to you as such, but it represents something important. The shoulder season, in the build-up to summer, you've got business on the books this year versus last year, and it's strong, it's twice as good. But more importantly and more relevant for you in the room, the Balearics, a fly-to destination. The shoulder season 4 times as strong in terms of business on the books versus last year, and in those key summer months of July and August, twice as strong. So this data is really encouraging, I think, for the resorts across Turkey that should be expecting a very decent summer. So a tick, I think, for leisure travel. It's moving in the right direction. People's confidence is returning. Now, what about business travel? The question that we have to ask ourselves is, do we continue to zoom, or do we start to resume our business travel? And it's been no secret that major cities across the world have had a more challenging time during the pandemic than the resorts, the domestic leisure markets. And even if we look at Q1 for this year across major European cities, you can see it's not that strong in many markets. We're seeing some get a little bit better, led by Istanbul, but Central Europe in particular still a little bit soft. When we index then, my apologies. Yes, when we index the performance for Q1 on 2019, you can see there some are getting back, again led by Istanbul, but you can see north of 70% of 2019 levels for some markets, but still a bit softer in Eastern Europe. So again, that raises the question, people's net propensity, their desire, the business traveller's desire to travel now and in a post-COVID era. And perhaps surprisingly, it's negative from both sides. So both now and in the future. Now, of course, there's been a lot talked about in terms of corporate travel. And I think some trips may go, those short day hops that we used to make, people's very conscious environmental impact, of course, as well. But we don't think business travel is gone in the long term. And this is a really interesting chart, I think, and it shows an awful lot. So this is real UK GDP and UK hotel demand since the beginning of the millennium. So we've got the 2001 recession in here, we've got 9/11, we've got the global financial crisis, terror attacks, the London Olympics, whatever else. Look at the correlation, really very, very aligned, until COVID. And you can see that massive divergence. But we don't think that's gone forever by any stretch of the imagination. So once we get into a pre-COVID, post-COVID world, I should say, we think that those lines will once again be a lot more correlated once more. And if we look across some key European markets, it's a busy chart, admittedly, but you can see from the beginning of the year, this is daily data, rolling 7 basis, occupancy, to the beginning of May, you can see the trajectory is a positive one. And if we look at business on the books, it's 3 times stronger than it was last year across most key European cities. And let's not forget as well, you generally pick up between 15 to 25% of your room nights in the 28 days before arrival. So if we add on that, this is not STR's official prediction, but it's indicative of the direction of travel. So if we take this as the proposed occupancy and we look at 2019 versus 2022, this is where we think we're going to get to. A thumbs up there. Dublin, Barcelona, Paris, Rome outperforming 19, and those other markets pretty close too. So I think generally speaking, again, we've got a tick for corporate travel. What about events? Well, I'm very privileged, obviously, to be standing on the stage today in front of you all. And we're here. We're maskless, we're together, we're meeting, we're greeting, we're networking, we're doing business. And we're seeing this more and more. If we move and look to the US, which is about a quarter in terms of time, quarter of a year ahead of where Europe is, and you look at group demand indexed on 2019, we can see it's about 75 to 80% of the way already. So that's the direction we're moving in. And if we look at business on the books again, even out as far out as September, we're seeing concerts, corporate events, those are the spikes. The Edinburgh Fringe Festival, for example, in August, 86% of 2019 levels from a business on the books perspective. This is really positive stuff, really positive. So I think events very much on the way back as well. People's expectation is they're going to be able to attend. And what about room rates? Well, a lot has been said about room rates and how fast they've recovered. And this, I think, again, is a really, really important slide. So this is real US ADR indexed on the pre-recession year. So the 2001 recession, it took 6 years in the States for ADR to recover. It took 7 years post the global financial crisis for ADR to recover. Yet 2 years into COVID, here we are, and rates are already back. So this downturn, very, very different to downturns that we've seen previously from a rate perspective. And if you view around the world, this is ADR on a rolling 28-day basis, again, indexed to 2019. You see the Middle East running ahead there, driven by Dubai, very strong expo, of course, and then sort of the Western world, so Europe, US, UK, all back up above 2019 levels. It's China that's dragging things down. Their zero COVID policy, not helping, of course, domestically, and then China outbound as well to the rest of Asia Pacific, holding that region back from really driving rates forward. But in our region, things are looking quite good. And if we look at European countries again, you can see a very similar picture. We're moving in the right direction, far more together than they were previously. And if you look at this leaderboard, again being led by Turkey, which I'm sure you're all pleased to see. This is in euros, I should add. But most of the countries now are back up above 19 levels of rate. Why is that? Now, we're putting this down to 3 major reasons why rates are going up. Firstly, those leisure destinations. You can look along all of these markets. They're from all over the world, And you've got 21 average rate growth from 2019. Look at those percentage increases. They're really significant. There is very little pricing resistance from the leisure traveller who's desperate to get out again, having been locked down for 2 years. Also, luxury hotels. We can see luxury hotels are pushing their rates at a faster pace than the rest of the market. And of course, if you're staying at a luxury hotel, you are less cost sensitive. So that as well lifts the overall market from a rate perspective. And then finally, we've swapped the business mix around a little bit. So lower rated group business has been replaced by higher rated transient business. So a combination of those 3 things we think really helping to drive average rates forward. Now I want to move on to what I'm sure you're all most interested in. And I'm going to start with 2 apologies, actually. The first thing I'm going to apologize for is the title. I know it's a bit obvious, but when you see, as we go through this presentation, you're going to see why I chose it, because the data, it looks good. And then my second apology is, despite the coaching from my good friend Mehmet Onkol, I think I'm going to mispronounce the names of Turkish cities quite badly, so I ask for your forgiveness in advance. But let's start and go back to pre-COVID days. Hard to remember them really, isn't it? But this is demand and supply and RevPAR percentage change for Turkey on a long-term basis. And those 3 years before COVID struck, so 17, 18 and 19, just look at the demand growth, look at the RevPAR growth. The industry was in a really strong place before 2020. We know what happened then, and we saw the subsequent pretty strong, pretty swift bounce back actually last year. And that recovery is continuing to this year. So this is daily data for Turkey from the beginning of the year, and we've got the same for 2019. And of course the days of the week are different, but you can see, generally speaking, occupancy pretty much back up to where it was. A bit of a dip, of course, for Ramadan, which you would expect, but that also underlines the importance, I think, of the Middle Eastern visitors to Turkey's hotel industry. Rates, back up above where they were in 2019, and we've seen a post-Eid boom as well in rates, looking at daily data over the past couple of weeks. So a positive picture there. Now, what about the markets? What about the cities? Now, this is full year occupancy, ADR and RevPAR for 2019. And what happened in Turkey happened across the rest of the world as well. This is 2021. And what we saw was those regional destinations. So you've got those industrial cities to the east, Adana, Gaziantep, Kayseri, all performing better than perhaps the more established markets. But that's what we saw across the world. It was domestic demand driven. And as we move forward to this year, the first quarter, looking at occupancy, you can again see those three Anatolian cities leading the way, but Istanbul catching up. Istanbul doing very well this year to date. A little bit softer in the capital, admittedly, and Bodrum as well. Of course, this is the first quarter. It's not peak season. That's going to grow. If you think back to what I said about the resorts, should be a good summer season. Lots of investment going in there, not just from a hotel, but also an F&B perspective, of course, as well. But when we index performance for the first quarter on the first quarter of 2019, this is where I think things look really quite impressive. Bursa, Bodrum, Kayseri, Adana, all above the levels that they saw in 2019. And if you look at those other cities, they're not far behind either. Turkey's occupancy really getting back to where it was. Rates, well, it's a bit more of a mixed bag, as perhaps you'd expect. Istanbul, way in the lead, unsurprisingly. And then we see Ankara, Bodrum, Izmir, all of those markets, more luxury, upper upscale properties as well. So naturally lifting average rates up a bit. And then when you get to Eskişehir and those more in the east, it's a little bit softer and candidly, when you compare internationally, quite low. But again, when we index, looks strong. With the exception of Eskişehir, you can see Adana, Ankara, Bursa, Izmir, and being led by Istanbul, rates all back above where they were. Istanbul's leading there. So let's have a look at this wonderful city in a bit more detail. So this is where we are year to date. First quarter, we've seen these numbers, way up on rate, only slightly behind 19 from an occupancy perspective. But if we look at a longer term trend here, we can gain a few things. Firstly, occupancy was pretty steady, obviously a bit of a dip in 2016. We all know why, but it rebounded very quickly. And then you can see this is euros, the devaluation of the lira from 2016 onwards, pretty consistent from an average rate perspective as well. But that currency fluctuation is interesting to look at from a data perspective. And you can see here, RevPAR in Istanbul in local currency has rocketed. And if I'd have put 22 on here, it's into four figures. As we all know, inflation is high. But then from a euro perspective, it's actually been pretty steady, decreasing almost a little bit as well. So from an international visitor, Istanbul remains a relatively inexpensive and very good value destination, which is great news, of course, for everybody here. But it seems a little bit rude to just talk about Istanbul. You know, we have to, of course, but we have to divide the city up as well. It's such a massive market. And here we've got the sub-markets that STR tracks across the city. And we've got percentage change here. So firstly, rates are up everywhere. So this is a good news story. In terms of occupancy, biggest growth on the Asian side as development continues to boom in that part of the city. We're seeing rates grow the most in Beşiktaş, Bosphorus, unsurprising when you consider the plethora of luxury and upper upscale hotels, and then a bit of an occupancy decline around the old Ataturk airport. Of course, when your main demand driver's no longer there, that's going to have an impact on your results. And then if we look at the actual performance, do look at the index here, the axis, here. You can see a bit of a difference, but it's not significant. So the highest occupancies in Taksim and the lowest around the old airport. Highest rates here in Beşiktaş and the Bosphorus region. Again, unsurprising to see. Now, this is our business on the books data, which is the first time we've showcased this. We've just launched this just last month. So for anybody who's not getting forward-looking data and wants to, please come and talk to me. But this was business on the books as of the 2nd of May. And you can see, versus last year, very, very different. So much stronger, which is fantastic. And if you look at the next 10 days, 2 weeks, Very strong occupancy levels, business on the books, but then it does drop. It does drop quite a bit, candidly, which represents a short booking window, which has always been the situation here in Istanbul. But that also means that the pickup is strong. So this is as of the 9th of May, looking at the pickup for the prior 7 days for each of the next 83 nights. And you can see for the night of the 9th of May, pickup was 20% for the prior 7 days. Really very, very strong levels of pickup, and you see that for the following week. So short-term booking windows, but you get that occupancy because people are booking late. And if you compare that internationally to some other key global gateways, you can see just how strong the pickup is across Istanbul versus some competing markets. So I think overall, it's a big tick as well for performance in Turkey. It is up above other competing destinations and really motoring forward. So now let's finish the presentation by looking into the future and looking at the pipeline. So the question is, where is the pipeline in Turkey? And at STR, we're currently tracking about 19,000 rooms, but we're tracking 8,000 of them here in Istanbul. Then we move down to Ankara, just over 1,000 rooms, a big wellness development in Goynuk, Hilton developing in Denizli, and then we see more familiar names, Bursa, Bodrum as well. But a lot in Istanbul, 8,000 keys. But when we look at who's developing, it's a who's who of domestic and international hotel brands. But we've got more than 2,400 keys from Marriott in the pipeline, more than 1,500 keys from Accor, 1,000 keys from Hilton. These are big international players who see further potential and further opportunity to develop in this amazing city. And although 8,000 seems a lot, it's only 12% of existing supply, which is fairly standard for a large international market as well. We're not seeing a huge amount of new supply as a percentage of existing supply along the coastline, but in the provincial areas, we expect to see things raised by about a quarter. And again, Hilton very much leading the way with over 3,000 keys in the pipeline there. I want to finish by having a quick look into the future from a performance perspective, and we're going to start by looking at tourism arrivals. So this is data from our friends at Turizm Economics. But this year, the forecast is for international arrivals, to be back up at 2016 levels, and then next year to be hitting 30 million once again. So although not as high as pre-COVID, the direction of travel, as we've heard from previous speakers, is definitely positive. But there is an elephant in the room that I think I should mention, and that's Russia. This is the percentage of Russian visitors as a total percentage of international arrivals, and it's high. It is high for Turkey. When we compare to other neighboring countries, you can see just how important the Russian visitors have been to Turkey. So that's going to be a challenge, I think, in the short term. But it underlines just how important those Middle Eastern visitors are, how important it is to get the German visitors back in numbers, the French, the Brits, and so on and so forth. Now, in terms of recovery, Turizm Economics do believe that domestic travel across Europe will be back up to 2019 levels this year. We'll see international travel back up to 19 levels in 24 and overall next year. So again, the trajectory is a positive one. And that's underlined by STR's official forecast. This is an aggregation of an array of European cities. And basically, the takeaway here is, by the beginning of the next year, we expect RevPAR to be up in the mid-90s of where it was in 2019. So we're well on our way. So to summarize, recovery so far has been very much driven by leisure, but the other sectors, corporate, MICE, are coming back. Rates are strong. Turkey's very much been leading the way in terms of recovery versus other European markets. Those regional destinations did better, but we're now seeing Istanbul certainly driving forward the recovery, and the resorts should have a good summer as well. Middle Eastern visitors remain pivotal. Lack of Russians may be a challenge in the short term. And for me, the pipeline just shows the continuing attractiveness of this very vibrant and fantastic country. So thank you very much for your attention, and I wish you all a great day. Thank you.